Stocks trade ranged after a soft open today, but advances outstripped the declines by a good margin. Pharma and consumer durables lead the gains, while real estate and financials drag.
Sugar stocks jump after the government reverses its decision to ban the use of sugar juice to make ethanol but limits diversion to 17 lakh tons. The industry now awaits a revision in ethanol prices.
Zee Entertainment has sought to extend the timeline for the merger with Sony's India operations from the earlier deadline of 21st December 2023. This follows the exit of several independent directors.
SpiceJet, Africa's Safric and Sharjah-based Sky One emerge as suitors for stressed airline GoAir. Sources tell CNBC-TV18 while none has submitted a bid yet, the move can be reprieve for lenders who were weighing liquidation.
Leading financiers tell CNBC-TV18 that adventurism in lending by some startups prompted the RBI to act by raising risk weights on consumer loans. Cholamandalam Finance says that it has curtailed business with two such partners. Hello and welcome. You've tuned into Business Lunch this Monday afternoon. I'm Nisha Podar. With me as always is Pavitra Parekh. So Pavitra, it's still holding above 21,400, no matter how ranged the market is, but still some psychological levels have not been breached. And that's also because of Reliance Industries giving a big boost. And also on the other hand, despite Bank Nifty being down almost by 0.5%, the big boy and the heavyweight HDFC Bank is still holding on to some gains. So that's pretty much the headline from the market. Nifty 50 at the moment, 21,429, a very tight ranged kind of a movement so far. And Sensex 71,667 levels. So it is down over 100 points. Bank Nifty is the biggest drag with 0.5% loss. And mid-cap universe, that's holding strong 0.3% gain. And that's also impacting the overall market strength today, Pavitra.
Oh, absolutely. And this is just a market where every dip is being bought, right? So even though we're pretty much flat right now on the index, a little bit on, like just around 27 points in the red, from the lows of the day, there's still an 80-point recovery, right? So let's not lose sight of that. That's holding up very well. For the banks, it is the larger private sector banks which are under pressure. Some of the PSUs continue to do very well. And a lot of pharma stocks are doing well today after a while. So some of the top gainers on the Nifty, Sun, DRL, Divi's, all doing quite well right now. IT has also made quite a move from the lows. In fact, a lot of the Nifty ID companies are off around 2% from the lows of the day. So I'd watch for those. On the downside, like we were mentioning, it is some of the private sector banks and some of the PSU companies which are taking a bit of a breather today. That is what's going on with the market. But let's kickstart the show now by talking about the sugar pack, because that is really buzzing around in trade today. Pretty much all of the stocks are up and about. This after the government lifted the ban on use of sugarcane juice to produce ethanol. Now, the decision came barely a week after it had banned the use of cane juice for ethanol production. Manisha joins us with more details on this. Manisha, big relief to the sector.
Oh, absolutely. And government reversing its decision that it took on 7th of December, clearly saw a turnaround by 15th of December. But what it comes with the changes that there's a cap now on use of sugar and molasses to at around 17 lakh tons. Now, the government officials also have suggested that nearly 6 lakh tons of sugar diversion already has been seen within ethanol. So absolutely a sigh of relief and a reverse of decision. This has happened after the sugar industry has had various representations and meetings with relevant ministries and the OMCs as well. So there are 2 to 3 things now that the industry is watching out for. One is about a monthly review that the government notification also talks about, and the next one clearly could be coming in as early as in the month of January. The second thing is about tenders now. So it all depends on OMCs on what and how much tenders are released into the open market there. And the third thing really is going to be about the pricing itself. Remember, for this current season, even as the industry is filling tenders to deliver ethanol, the pricing column is left empty because the pricing is yet to be decided. So that could happen as early as in the cabinet meeting in this week itself. There is a price expectation, a price hike expectation, that is to the tune of 8 to 10 rupees for B heavy and C heavy molasses. If that as well comes as per the industry expectations, you could be looking at yet another surge coming in for the sector.
All right, so more news expected. Thanks, Manisha, putting all that into perspective. Sugar looks sweet today, but we'll stay with the sector and get some more point of views from the corporates in this sector. We earlier spoke to Vivek Saraugi, who's the managing director at Balrampur Chini Mills, on their view on the government's decision. Listen in.
Sugar prices do not, deepen the correction, and probably we've hit the low already in my mind. Secondly, it allows mills like us and others to have flexibility and run juice operations. One would not say 100%, but much better than what we were. It's a well-distributed, well-thought-out, well-calibrated relief based on the basic premise that there is sugar needed, and next year also looking slightly vulnerable owing to maybe a lower Maharashtra-Karnataka production. So this is a decision which I hail, which I appreciate, and I think all players from the industry have appreciated this. And there is a fear of a lower sugar production next year. Should that happen, one would definitely look to build up some inventory to feed the next year. So 305 to 310 lakhs production after a diversion of 17 lakhs. I think that is the number we've given out. And let's assume this leads to a 20 lakh inventory build-up, so be it. It's needed in the system.
All right, that is the word coming in from Balrampur Chini. All of the sugar stocks up and about in trade, like we mentioned. But with that, let's move on and bring you an exclusive as well now. Sources tell CNBC-TV18 that SEBI has given the National Stock Exchange a set of conditions that it needs to fulfill before filing for its IPO. Yash is here with more on this. Yash, this is a very closed, closely watched IPO. But tell us what are the conditions that SEBI has laid out?
Well, Pavitra, closely watched would definitely be an understatement. If you ask 10 people what's the most awaited IPO for them, I'm sure about 8 out of 10 will tell you it's National Stock Exchange. And there's a big development that we've been able to pick up as far as NSE's IPO process is concerned. Of course, everybody would remember that the attempts as far as this particular IPO is concerned have been ongoing for a very long time with the previous CEO Vikram Limai as well, and now with the CEO in place Ashish Kumar Chauhan as well. What we've been able to pick up is that market regulator SEBI has specified certain preconditions to NSE's top management, and these preconditions are essentially conditions which NSE is expected to satisfy before it files for its IPO with market regulator SEBI. As far as the conditions are concerned, what I've been given to understand from my sources, the first one and the most important one is with respect to the technology which the National Stock Exchange has. It's of course the largest exchange in the country, the largest derivative exchange in the world. Technology is at the core of it, and market regulator SEBI has asked them to strengthen the technology infrastructure and satisfy the market regulator when it comes to that aspect. The second one is to go glitch-free for about a year as far as NSE is concerned. Of course, about a year and a half back, there were multiple incidents of trading glitches coming about. After that, NSE had also set up the disaster recovery side. There were mock tradings which were done. So that is another condition which SEBI had specified to NSE, that is to go glitch-free for a year before it files for its IPO. And the third one and the most important one, which NSE struggled with for a very long time, those are the various legal issues with respect to the dark fiber case, co-location case. So SEBI has also asked NSE to clear all those legal cases and have a good corporate governance structure in place before it files for its IPO. Importantly, NSE is looking to dilute less than the minimum, what is required to be diluted, that is 5%. It wants to dilute about 3.5%. That is the intention.
Sure.
It remains to be seen how SEBI takes this forward from this point.
All right, some crucial and important developments. Yash, thanks so much for getting us those exclusive details. A look at VIP Industries, take a look at that. The company has denied any promoter stake sale talk. Now, it's important because companies rarely talk on behalf of the promoter stake sale aspects. But here, VIP Industries has put out a notification that it's a mere rumor. Take note of that. Moving on then, we learned from our sources that Go First has received interests coming in from 3 suitors to acquire the airline. Ritu Singh has more details.
Just when lenders had given up hopes of finding a suitor for Go First, 3 entities we understand have come forward to express an interest in taking over the airline over the course of the last week or so. Now, we have been given to understand that domestic carrier SpiceJet is among those who has shown an interest, and in a letter to the resolution professional of the airline, SpiceJet has sought some time to conduct its diligence and evaluate the opportunity. Now, in this letter, it has indicated that SpiceJet was recently able to raise 2,250 crore rupees, and it could use some of those funds to acquire GoFirst. Now, besides them, an aviation consultant by the name of Sky One, which is based in Sharjah, has also shown an interest in acquiring the airline, and so has Safric, which is an investment firm that is focused on Africa. However, none of these suitors have indicated what they could actually offer the airline in terms of a concrete bid. So as things stand, the resolution professional is currently conducting a due diligence on these suitors to see if they make the eligibility cut, and the committee of creditors is expected to meet later this week to assess the next steps in light of this new development. Remember, we had reported earlier that GoFirst had received no bids when the deadline had ended on the 22nd of November earlier, and the lenders were even weighing liquidating the airline. Now, banks we spoke to indicated that they are going to watch out for whether SpiceJet or these other suitors, if they qualify, are able to come up with a decent bid, given that the ongoing litigations with lessors, etc., continues to pose a challenge in this matter. SpiceJet, Safric and Sky One are yet to respond to our query on this story.
All right, Ritu, thanks a lot for getting us those developments as far as GoFirst goes. But with that, it is time for a break. When we come back, there's lots more news and updates, so stay with us. We'll get to that in just a bit. Hey guys, welcome back. You're still tuned into Business Lunch, and let's bring you an exclusive conversation now. My colleague Yash spoke to Nirja Kapoor, chairperson and managing director at New India Assurance, and asked her about the company's solvency picture currently, and also if we could see a possible merger of 3 PSU general insurance companies into New India Assurance. So listen in to what she had to tell us.
I don't see this as a crisis point as such. We are in a reasonably good place. We had started the year with 1.87. And due to the results of the second quarter, us making all the required provisions for all the claims that were reported, we are definitely likely to see an improvement in the third quarter as well as the fourth quarter, going by the results as of now. So we do expect that the solvency will improve. We are not looking at any infusion of funds. In fact, New India has never had any infusion of funds from the government of India, and we are a dividend-paying company, including to the government of India. So I do not expect any requirement for infusion of funds. We should be able to shore up our solvency from our existing business itself.
Where do you see it going by the end of the year?
It'd be difficult for me to comment on that, but definitely you will see an improvement.
Okay. Now, this is one question which, comments about this keep emerging time and again. Whether, the other 3 PSU general insurance companies should be listed, which was at one point of time proposed as well, whether they should be merged into New India Assurance. As the management of New India Assurance and the business and the turnaround that you've done in the company, personal opinion, would it be fair to merge the 3 PSU general insurance companies into New India Assurance and then take the solvency lower here as well, problems here as well? Do you see that as the ideal scenario?
It's difficult for me to comment on that. All 4 of us are, all 4 insurance companies, Oriental, National, United and New India, are 4 different companies. Even though we come under the umbrella of Government of India, we are each, diverse companies, and having diverse portfolios, having having a different set of software and the policies which are issued, etc. It will be very difficult, different platforms altogether. So it will be an extremely humongous task, in my opinion, to merge the 4 organizations.
All right, a very interesting chat with New India Assurance. On that note, we'll slip into a short breather on Business Lunch. But don't go anywhere. Up next, Israeli forces uncover a large tunnel at the Gaza-Israel border. We get you more details on that conflict when we return. Nifty, which is down 0.5%, and HDFC Bank, big boy, which had been holding on, is absolutely on the flat line along with SBI. So keep an eye out on that. Moving on to some news developments, and the Telecom Minister Ashwini Vaishnav tabled the Telecommunications Bill 2023 in the Lok Sabha today. Now, this bill is meant to replace the 138-year-old Indian Telegraph Act that governs the telecom sector presently. Now, the bill proposed to bring internet-based calling and messaging apps under its ambit to enhance user safety and also curbs the power of the Telecom Regulatory Authority of India, or TRAI.
All right, that is an important update. But moving on now to bring you the latest weather updates as well. Tamil Nadu continues to reel from heavy rains caused by cyclonic circulation formed over the Indian Ocean and the southwest Bay of Bengal. Heavy rains have caused floods in parts of the state. The NDRF, State Disaster Response Force personnel, fire and rescue service and police teams are evacuating people from heavily inundated localities and housing them in schools and marriage halls. The government has also declared a holiday for educational institutions in several districts.
And in some international developments today, getting you latest on what's really happening in the conflict-ridden West Asia. Israeli Defense Forces battling Hamas said that they have uncovered a large tunnel at the Gaza-Israel border. Now, they suspect this tunnel was used to transport carloads of militant fighters during the attacks on the 7th of October. The tunnel, which is 4 kilometers long, is one of the largest the IDF have found so far. A spokesperson for the Israeli military has said that the tunnel was once the heart of Hamas governance. Since October 7th, Israel has besieged Gaza after Hamas first attacked. According to Gaza's health ministry officials, over 19,000 Palestinians have been killed so far.
All right, with that, we have come to an end on this edition of Business Lunch. From Nisha, me and the entire team, thank you for tuning in, and stay with us because Midcap Radar comes up after this short break.